Well, greetings and salutations, test takers. This is Series 7 Guru coming to you from my off-grid studio, getting our kicks on Route 66. Every other Tuesday, we do a live stream overtime session in a virtual classroom on Zoom, and it's tonight, Tuesday. So we'll see what people have to talk about this evening. Okay, you know how it works, everybody. Just put into the chat what you would like to discuss. First come, first serve. Don't put anything into the chat more than once because, we want to rotate around so everybody gets an opportunity to talk about what they would like to talk about. So whatever you'd like to talk about, put it in the chat and we'll start knocking that out. Nobody has anything to talk about? Well, that'll be great. We'll call it a night. I'll go watch my NBA games that are queuing up. Bonus for non-registered employees. Yeah, you got to be careful, Kendall. I would like to know the context of the question. The bonus can't be based on commissions or transactions. So the bonus could be based on overall, stuff like compliance and other things. I don't think you'll see a bonus as it relates to your test. But if you have a particular question you'd like to bring up, I'm more than happy to take a look at it. But the answer is, can non-registered employees have bonuses? They can, not based on transactions, right? That could be a factor, but it can't be why they're getting the thing. What else? Is that it? I have no problem whatsoever and calling it a night. So what, you guys just came on the channel tonight as a voyeur to see what other people were going to talk about? Didn't bring anything of your own?
Hey, Dean.
Yeah.
Hey, it's Ron. Thanks for sending this to me. I've got lots of questions on different options, but they're from the practice test, and I don't want to monopolize the time because I know I'm getting
Okay, well, let's see what
tomorrow.
You might not need to worry about it, Ron. Let's just see what we got going on here.
Okay.
It's better if, Sarah, if you have a particular question, like, I'm struggling with how the universe works, is kind of hard to be helpful.
No,
If you say, Dean, I'm struggling with total return, or I'm struggling with CAPM or modern portfolio theory, that's a little easier to be helpful with than performance measures. But the ones to be aware of, Sarah, are total return. You definitely should be able to do total return as a performance measure.
Okay.
Right. I'm talking to Sarah, who's taking 66 run. This is not for you as a 7.
Sorry.
That's all right. So, Sarah, make sure you can do total return. That's what the investment pays you in. The only two ways to make money, Sarah, are income stream and or price appreciation. Those are the two ways you're going to be able to make money in an investment. Total return is the income you make from the investment. In stocks, that would be the annual dividend. In bonds, that would be the annual interest. And then plus or minus what you made or lost on the investment. So that's one performance measure that's definitely going to be there, and you can't be fumbling around with. You got to be able to do that. I would be prepared for annualized return, where we show you like somebody who made, 8% over 6 months, and they ask you the total annualized return, you times it by 2, or whatever, or it's 22% over 2 years, you divide. So I would be prepared to turn a return into an annualized return by either multiplying or dividing, depending on, here comes a big word, holding period return, right? So the holding period is regardless of how long you've had the investment. So if you've had it 3 months, you times by 4. If you've had it 2 years, you divide by 2, you get the idea. Definitely should be able to do current yield. Is math on your 66, Sarah, in general, I wouldn't worry about performance measures as much as I'd worry about other calculations. What I mean by that is I'd be prepared to recognize or perform certain balance sheet calculations, like working capital, current ratio, acid test, also known as the quick ratio, debt to total capital. But Sarah, I think people on both 65 and 66, I think either they are math people and they want lots of math and don't get it, or they hate math and they spend so much time that would have been better spent elsewhere, because maybe 4 or 5 calculator questions on 65, 66. I had a guy at, I showed up for tutoring, Sarah, and he said, Dean, I'm not paying you $250 an hour to do math with me. He said, I'm a serious math geek. Give me any 2 numbers. I can solve for the third. And so we're not doing that. I said, hey, fine. Anyways, he passed, but he called me because he goes, man, Dean, I wish I would spend a little more time like memorizing formulas and stuff. I didn't, because I can figure them out in my head, but it was mainly input. And what would be output? They didn't ask me to do the math, just asked me to recognize it, which is more likely that I'm going to ask you to recognize like what best describes current ratio. And you'd say current assets divided by current liabilities, A, B, C, D, right? So that's more likely to be the test scenario. Before we get to Ron, aggregated orders, when you're going to do it, do you notify the new clients? Are you taking Kindle a 24 or a 57 or a 9 or a 10? What test are you taking, Kindle? 66, that's crazy. When you're going to do it, they're not called aggregate orders. What we have are what are called agency crosses, where I'm acting in dual agency. I'm representing both the buyer and the seller. So can we aggregate orders? We can. I mean, that would have to be something we do, and then we can split it later. Do you notify new clients that we aggregate orders to save money? Yeah, that would be part of our thing, that we can save money and then we do allegations. The risk there is I might show favoritism. Like, so I call Goldman Sachs and I say, buy 100,000 shares of GE, what's called an omnibus account. I wouldn't worry about that. Then I'm going to decide how many shares go into what portfolio. So 5,000 for Kendall, 10,000 for Ron. Sarah's my favorite customer, 30,000 for her. That's the test question, by the way, right? If we are aggregating orders, meaning we're calling in that once, then we have to have some method to make sure we're not being discriminatory about how we're then going to allocate that amongst the portfolios. That would be what I would think, right? And then we would tell you that we do that to save money. Who do you notify? Another one was not to notify anyone, and figured that one was wrong. I would tell you that we would disclose that as a conflict of interest in the investment advisory contract. That if we're going to be aggregating orders and calling in orders like I just did, that is a conflict of interest because of what I just brought up. How am I then going to allocate that to the client portfolios? So that would be my answer. The test question, Isaac, about incentive stock options, they have tax advantages. You're not immediately going to get taxed as you would on a non-qualified stock option. So non-qualified stock option, the minute you're vested, it's part of your compensation, you owe taxes. Oh, well, there you go. So that sounds like a weird one, Kindle. Could be an experimental question. I haven't anybody tell me they've seen that. I am just wondering if that was an agency cross, perhaps, and you just didn't recognize it. I don't know. That's my best attempt at that one. When someone buys at the low strike and sells the high strike, it's always bullish. That's correct, Ron. Always, always, always. All right. Who was it that had the QID in the previous session? Are you here? Who was that? That was James. Are you in the chat somewhere? So let's see what this is. I'm going to bring this up. I'm going to bring up the Kaplan QBank here, and I'm going to do this question, this QID, and then Ron will do whatever you have cooking. Okay, hold on.
Hey, Dean, while you're doing that, could you retell me the name of the book that you're doing for book club?
Yeah, She-Wolves. She-Wolves. It's about legendary ladies in the securities industry, like Muriel Siebert. So that we'll be doing that. I'm trying to make sure we don't try and do too much. So this year I got to redo 2025. So I'm putting it in the first, I think, couple of weeks we get back from the new year. And then, as I told you, my idea is that what we'll do is we will, talk about the book, but I'm sure there's going to be some testable content there. She was a member of the New York Stock Exchange. So we'll see how it goes. I mean, yeah, maybe it's a good break from doing other stuff, right? You might, sometimes a nice read is a good way to break. Okay, let's see. This is a Series 7 question.
She Wolves, The Untold History
Let
of
me
Women
find
on
you
Wall
guys.
Street.
She-Wolves. It's called She-Wolves.
Okay, Paula Breen.
Yep, there you go.
Thank you.
All right, so this is a question that came up. The basis, that's the fancy word for yield to maturity, of a bond with a 5% yield to maturity in 20 years is selling at 115. So this is what I love about the teeter-totter seesaw. And I'm sure that James is probably looking at this question and going, Dean told me I wasn't going to have to do this. And yet here's a question where they're asking me to do this. And then I always say to people, are they really asking you to do that? Right? There's my teeter-totter or seesaw. They have told me that it has a 5% nominal yield. And I've always said you have to be able to do current yield. So what I'm going to do now is I'm going to do current yield and see if that helps me come up with an answer. Should we be able to do current yield? The answer is certainly yes. Current yield is what an investment pays me divided by what it costs me. What it pays me divided by what it costs me. So what it pays me is $50 in interest, and what it cost me was $1,150. And so when I do that, I get a current yield of 4.35. 4.35 as my current yield. And so I know the yield to maturity based on my teeter-totter has to be something less than 4.35. There is my yield to maturity. There is my yield to call. And so there's 4.35. I only have one less than that. And that's why the answer is A. So, James, I'm sure that you were probably saying, well, gee, Steen, you told me I was going to have to do yield to maturity. And here's the question. And I just proved that you didn't have to do yield to maturity here, right? It's the relationship. It's the relationship. So before you start cussing me out at the exam, say, oh, Dean told me I'm not going to have to do yield to call or yield to maturity. And here's a question asking me to do that. So, whoa, Dean did tell me I need the teeter-totter. I need to know relationships. I need to be able to do current yield. By the way, this is also on the 65. So remember, if this doesn't look familiar to you, then you need to review what's called the teeter-totter or seesaw. The teeter-totter or seesaw. Any questions on that? All right, let's go back to the chat. Christine, all right, Christine, is that Series 7 or is that 66? What is that? 66. All right, let's see if I just put away the Kaplan Quebec. I probably did. Oh, I didn't. All right. Woo. $66. Let's go get the Quebec. Let me go find you guys. Can you see the Kaplan Quebec? Yes, no, maybe.
Yes, sir.
All right, 1520128. A man is planning to start his own glass sculpturing business. He wants to be able to deduct his anticipated losses. So that means C Corp is out. You should have been immediately able to eliminate a C Corp because C Corps, the tax consequences are trapped within the corporate shell. So we need some kind of a flow-through vehicle, a business structure that has a flow-through. He anticipates that the enterprise will borrow money from lenders and is willing to personally guarantee the debt. He also wants to attract other investors. Okay, but he doesn't want to give up control of the day-to-day business operations, business decisions. What form would you recommend? Well, I would make himself the general partner and he'd raise money from limited partners. right? I don't know which one that you liked better than that one. General partnership would mean everybody has equal say, so that's out. S corp would have shareholders, so maybe an S corp would be a good miss here. You're definitely going to get this as an answer set. You're definitely going to get this as an answer set. And you should know the limited partners with partnership is an investment vehicle. You should know about C corps don't have flow throughs. S corps do. S corps have a maximum of 100 shareholders, no aliens. I don't see here an LLC, but you should know an LLC is a limited liability company. So 65, 66, I would expect an answer set on business structure. All right, let's see what our next one is. 152 0989. Security has anticipated return of 8.7 and a standard deviation of 4.6. You would expect returns to have a 95% probability. And you're not going to have to do any of this. This is Kaplan just being jerks. There's no situation on the test where you're going to have to do this. What you need to know is the variance, the definition of standard deviation, and be able to tell me that lower standard deviation means lower volatility, but you will not have to do this at all in terms of the bell-shaped curve. So I wouldn't worry about that one. That one is, Sarah, kind of what I told you about the siren song, where people go down these, alleys and mental cul-de-sacs, and instead of staying on the broad avenues and highways of the information. Very testable for all of us. A client of your broker dealer accepts your recommendation and turns in a market order to purchase. So we should always know that when customers are buying and selling, they always pay the high price. They're going to purchase 600 shares at the ask. They always receive the low price, the bid. Based on the following market makers' quotes, it would be expected the firm's trader would direct the market order. So it's like buying a car. So I'm looking at buying a pickup truck here from my off-grid location. I know I'm paying the high price, but I'd like to pay the lowest of the high, right? So here you're going to pay the high price, but you want to pay the lowest of the high. So it looks like the lowest of the high prices, the ask price, is $22.25. The customer wants to do 600 shares, and market maker B is only willing to do 500 shares. So it looks like we're going to go to market maker A because they have both the lowest asking price and they have the size. 10 by 8 is the size. So I'm willing to buy 10 round lots into my inventory, 2205. As market maker A, I'm willing to sell 800 shares at 2225. So that's who we're going to call. By the way, you should be able to look at this as exhibit and tell me the inside market or inside quote, which is the highest bid, 2211. The lowest ask, 2225. So you'd definitely be able to do that. Yeah, that's not bad. I wouldn't feel bad about that as a miss. The best supplement outside of Kaplan is my friend, the Test Geek, Brian Lee. Brian Lee, Test Geek Exam Prep LLC is the best. All right, so reviewing hedging. So a hedge keeps good things in and bad things out. Good things in and bad things out. So it's insurance. It's insurance. Now, if you're taking a NASA exam, it's pretty straightforward. When you hear the word hedge or protection, you know you're going to be buying the option. From that alone, you have a 50-50. So if you're protecting a position, a stock position, and that's what the word hedge means, you're either going to be buying a call or buying a put. Now we have two stock positions. What are the two stock positions we have? Long stock and short stock. So what we're interested in the hedge is to be able to do what's called the offset. And we know the hedge is going to be dollars out. What are the two option or stock positions we might have? What are the two option positions or stock positions we might have? We might have a long stock position, or we might have a short stock position. So we're either hedging a long stock position or short stock position. What we always want to be able to do is the offset. So if I'm long the stock, I want to be able to buy back or sell the stock. I want to be able to do the offset. And if I've sold the stock, I want to be able to buy the stock. I want to be able to do the offset. So if I ask you how to effectively hedge a long stock position, we would buy a put. That is the effective hedge for a long stock position. Let me put that there. And if we're trying to do, by the way, I'm going to go boom. And if I'm trying to protect a short stock, I'm going to buy a protective call. And that's what we're doing. We're doing the protection, right, for the short stock. We're always interested in insurance. You know, insurance, you pay a premium. Insurance isn't about what if you're right. Insurance is about what if you're wrong. I don't know if it's helpful. I think of buying the call as putting a ceiling on that short stock position and buying a put, putting in a floor. Now, on your NASA exams, if you tell me you missed it because of options, I'm going to say you had other problems. Maybe 1, 2, 3 option questions. Your time is better spent elsewhere. If you're taking a series 7 run, then it's definitely going to be there. There's going to be 20 of them, right? So you're going to, have to do a better job on it. Boom, boom, boom. So you got, do you remember what you got, Kendall? It sounds like you had to face a death draw, aggregated orders and options. That's one reason I recommend that you take the 66 right away, because I would hope that you didn't take your 7 and all of a sudden you just forgot everything you learned about options. I hope not. Was some of that still up there in the brain housing group? I hope it was. Can we review options hedging, Sarah? I'm just doing that now. Did I already do that one? I'm not sure I did that one. Boom, boom, boom. Let me see if I still have that up. Client, can you see? I see my Kaplan's Q Bank. Yes, no, maybe. Which of the following statements regarding the economics of fixed income securities are true?
We can't see it. Sorry.
You can't see it? All right. Well, let me go grab it for us. Stop share. You see it now?
Yes.
Yes. No, maybe.
Yes.
Thank you, Christine. Christine has a good thumbs up. I like it. Good thumbs up. All right. Which of the following statements regarding economics of fixed income securities are true? Listen, if you're taking the SIE or the series 65, You should definitely know that short-term rates, like the Fed funds rate, test question, are more volatile than long-term rates. In fact, test question, Fed funds is the most volatile of all the rates you're held accountable for. So you should definitely know short-term rates are more volatile than long-term rates. Be careful whether they're asking about bonds or rates. So Roman number 1 is about rates. So I need Roman number 1. Short-term bonds react more than long-term bonds. No, that's not true. Very testable. Long and low, baby. Long and low. Long and low. The bonds with the longest maturity and the lowest coupon are the most volatile. You know, rest in peace, Silicon Valley Bank. Right? They had a lot of long-term bonds. The Fed started raising short-term rates, and they had a $2 billion loss on their long-term bond portfolio. Because as interest rates go up, very testable, bond prices go down. Now, if you're taking the 65 or the 66, they have a fancy word for volatility called duration. Duration. So Roman numeral 4 is true. And another way to say that is the longer term bonds are going to have a higher or longer duration. They're going to be more volatile. Right? So very much a test question. I like this one, 1 and 4. 1 and 4. All righty. Well, what else we got? Got anything else?
Hey, Dean.
Ron, did you have a couple? Can you be charged for a civil lawsuit for not telling who's? Well, you can always be sued civilly, Kendall. We live in the U.S. and you can sue anybody about anything. We even live in a very litigious. I think what you mean to say, can the state administrators sue me? Yeah, well, you know, state attorneys can sue whoever they want to. I mean, you know, by the way, you should be careful because when the government comes after you, those attorneys aren't on the clock. Your defense team is charging you by the hour. So, you know, I always like it when somebody goes mano a mano against the government, right? Not telling who's acting as a principal in trade. I don't, yeah, you can get sued for that. Omitting material facts is the most egregious sin you can commit. I saw a broker being interviewed. He was asked why he didn't tell the client this information. He said, I thought I'd lose the sale. I can't think of a worse answer than that. I'm supposed to say, hey, it might alter your decision, but it's something you ought to know. Immaterial means I'm not in trouble because it wouldn't alter your investment decision. Yeah, you know, in fact, a lot of times, Kendall, a state administrator might say, Kendall, right now I'm pursuing this civilly, but I'm hoping I'm not going to have to pursue it criminally. Ooh, you don't want to hear that, right? If I'm telling you civil, it just means I'm going to ask you to write a check. Criminal means I plan on throwing you in jail, right? So civil and criminal, right? I know that it's unethical and prohibited, but could you file it? Yes, certainly can. State administrators love to, you know, usually the state administrator is a politician. If you're listening, I apologize to my NASA friends, but the state administrator wants to be the state attorney general, you know, then may become a senator, and then may become a vice president, and then may become president. You know, Kamala was the head of the, you know, state administrators of California, protecting investors and other people in California. That's who she is. And did she always want to be just the attorney general of California? When she was district attorney of San Francisco, my friends get upset with me, but I spent my career in San Francisco. And so, you know, as San Franciscans go, she's pretty conservative, but it depends, I guess, where you live, right? And where you're at. But she was district attorney, ladder of offices. So the way they make their bones is by saying, hey, Kendall, I'm the guy who put that person in jail, or I took down that broker dealer, whatever the case may be. Subpoena, they don't subpoena. Subpoenas have to come from a judge. So they would first ask you politely to cooperate. And then if you don't politely cooperate, then they go to a judge and get a subpoena. All right, looks like we got a couple more, then we're going to call it a night. 151-8416. 151. The NASMIA, National Securities Market Improvement Act. For us on 6566, The two biggest things this did was create federally covered investment advisors and federally covered securities. Those are the two big test issues on 65 and 66 as it relates to the National Securities Market Improvement Act. Amended the Uniform Securities Act to preempt state registration of federally covered securities. There we go. Under NISMI, all the following covered securities. This is a bad miss. You should definitely know municipal securities are exempt, not federally covered securities. Exempt, not federally covered. Are we clear? Now, you may think that's a kind of a, but hey, welcome to the test, right? Are we clear? That's a different definition. You should definitely know that Investment Company Act of 1940 securities are federally covered. You should know Reg Ds are federally covered. And then NASDAQ, you should know is covered. I think that one's kind of iffy, right? But that's the big takeaways. You should know municipals are exempt from everything. So I think that's I'm going to call that a bad miss just because we want to take away from that munis are not part of this regulatory framework. 8625. Under the Uniform Security Act, which of the following is true regarding registration of securities? State registration by coordination is available only if federal registration has been filed. Yeah. That's the whole point of coordination. The whole point of coordination is you're doing a federal S-133 registration statement and coordinating with the states you want to offer that to residents of. So A. Registration becomes effective on the date ordered. No, they come together at the same time. Administrator may require a prospectus to be delivered to every purchaser of a registered security no sooner than the time that which puts it. No, that's nonsensical. The effectiveness assures the accuracy. Oh, God, no. On the front page of every prospectus, in all caps, it says the SEC and or state administrator neither pass upon the adequacy or the accuracy of the information contained herein. Wow. The SEC and the state administrator neither approve nor disapprove of any securities offering. Well, here's the last part, very important. Any claim to the contrary is a criminal offense. Somebody asked earlier about civil. I didn't use that word. I used the word criminal offense. What does that mean? That means you could end up in either state prison or federal prison. And sometimes they have a meeting to decide which prison you should go to. The feds say, I got this guy. State guys, we want him. Right? Yeah, I'm not sure, Kendall. I mean, I don't know what to make of your draw there. It sounds like you had to face a death draw. I would say I would have taken all of the multiples. You can be sued for anything. So I don't think there's an exclusion here about being the state administrator. I mean, and then again, that gets litigated too, right? Whether they have the authority to do what they're doing. On finding max, the put is the difference between the premiums and a put. Well, it depends if you're long or short run. Here's our last one. So let's get our whiteboard. This will be the last one of the evening. So, Ron, are you a bull or a bear? I don't care. Just pick one. Are you a bull or a bear?
Bull.
All right. So that means you're going to do a short put, right? Because a short put is an obligation to buy the stock. You're the put-e. We have putters and we have put-es. And so what you have just created there, Ron, is an obligation to buy 100 shares of Apple. If you don't want to be obliged to do that, then you shouldn't have collected this money. So there's our obligation to buy the stock at the strike price. I like to think of options as floors and ceilings. what Dean likes to think about is adjustable, but what I like to think about, Ron, is options about floors and ceilings. Here is our ceiling of Apple at 230. And boom, let me put that there. If at expiration, Apple is 230 or higher, this contract has no intrinsic value. And it will expire worthless. You get to go neener, neener, neener. You get to keep the money. So the best case when you sell an option contract is you agree to be a potential victim and nobody victimizes you. The contract expires worthless and you get to keep the money. What you did here, Ron, in this position is what we call an opening purchase. An opening sale. Opening sales are used to establish or add to a long position. I'm sorry, I'm getting late. Opening sales are used to establish or add to a short position. All right, so that's going to be dollars in. Now, one thing you might want to do immediately is get to your break even, because the break even is a nice pivot about what's going on. It's the same break even whether you're long or short. And if there's one thing you want to remember about options, it's call up and put down. Call up, put down. So the break even here is going to be 230 minus 9. 221 is my break even. I like to put that there. Then what I like to do is put my arrow to remind myself whether I'm bullish or bearish. And as we said here, we're bullish, meaning we want the stock to go up from there. We can also put that there, boom. And now we know this is going to be bad news, right? And we know stocks can only go to 0. There's no such thing as Apple going to -5, right? So all the action here is taking place between 230 and 0. All right, so max gain, as we said, would be the contract expires. That would be your best case scenario. And you get to say neener, neener, neener. And boom. So max gain here is 9 points or $900. I like to do things on a per share basis. A per share basis. I'm bullish. Got my max gain. All right, max loss. So your max loss is when somebody makes you pay 230 and the stock is worthless. I say, Ron, the worst case, you're going to pay 230 for the Apple and the Apple is worthless. So the worst case is you lose $221 a share when the stock goes from 221 all the way to 0. Right? And that would be the short version, right? The long version would be the opposite. Any questions on that one? I think puts are the ones that throw people for a loop. So, I get it all the time. I don't get it. I sell it to buy it. I say those are different its. When you sell a put contract, dollars in, you're obliged to buy the stock, dollars out. Those are different its. When you sell it a put contract, dollars in, you're obligated to buy the stock, dollars out. Or, Ron, the other thing people do, I don't get it. I buy it to sell it. Those are different its. When you buy it a put contract, dollars out, you have a choice to sell the stock, dollars in. So those put contracts are ones that throw people for loop. All right. Anything else? Did I miss anything else in the chat? On finding max gain, max loss, the difference between the premiums. Well, that would be a spread. The difference in the premiums is called a spread. A spread, Ron. Spread means difference. So if I were your broker, I'd say, Ron, why would you want to take this 9 points and not be able to close this thing out a little sooner? So what I would suggest you do is buy a lower strike put just in case somebody sticks it to you. You can stick it to the next guy. This is only for sevens. This is not for any other exam that you would have to do this. So now what we're doing, Ron, is offsetting your obligation to buy with a choice to sell. So now your only action now is between the two strikes. So now we have a 230 and we have a 210. And this is a spread. What we're spreading is the difference in the premiums. And that's why we're doing this. So all the action now, there's 20 points to be made or lost. As I said, the spread is the difference. The spread is the difference, right? So that's what we're spreading. The difference here is 6, right? Because we brought in 9, we paid out 3. So Ron, this is a 6-point credit spread, very testable on 7. And if it's a credit spread, we want the contracts to expire so we can keep the money. Max gain here, Ron, is 6 points. I think you're kind of a jerk if you say, hey, Dean, had I not bought the 210s, I would have made 9. I said, well, true, but you would have been taking more risk. Here you can only make 6, but you can only lose 14. I think that's a much better risk reward trade-off. So credit, expire, you want the difference in the premiums to narrow, get smaller. Right now, the net is 6. If I can close it out for 3, we make 3. Close it out for 4, we make 2. We want it to get smaller. Credit, expire, narrow. The gain and loss, Ron, equals the difference in the strikes. So there's 20 points here to be made or lost. That's the whole point of a spread. And of those 20 points to be made or lost, you collected 6. And that means you can now only lose 14.
Hey, Dean.
Yeah.
Hey, when this helps a lot, but if this was a call spread versus a put spread, would the difference between the premiums also still be max gain, or would that be max loss for these swap
All
positions?
the action on the spread takes place between the strikes.
Okay, thanks.
Right. So your point, if that's a call spread, doesn't matter. Now, by the way, Ron, I'm not sure you want to memorize the maximum loss in a credit spread is the difference in the strikes less the net credit. I just think that's a mental mess personally. I think there's 20 points. I collected 6, so I lose 14. So Ron, now the worst case is somebody sticks it to you at 230. You're the put E at 230. And then you put it to the next guy at 210. You're still a loser, but you lose 20 instead of everything to 0, right? And then of the 20, you got 6, so you lose 14.
So I guess, is it safe to say always the difference in the premiums is always going to be the max gain column?
Always. And now this is not good. Your break even before was 230 minus 9, 221, but you don't have a 9-point cushion anymore. You only have a 6-point cushion. So now the break even is going to be 230 minus 6. All right. So the break even, by the way, test taking trick, Ron, the break even has to be somewhere between those two strikes. As I said, all the action takes place between the strikes. Right. And is this a bullish or bearish? This is a bullish spread. The larger premium dominates the position.
Mm-hmm.
Right. And that's a short put. If you have your matrix, I don't know how you're doing it, but if you're using your matrix, right, short puts are bullish. So credit put spreads are bullish.
All right. That really helps me what I was going through today. Thank you.
Yeah. And remember, I think we got 3 hours tomorrow. So you and I can.
Yeah. I'll be getting ready.
This we get to share with everybody, but
Thanks.
All right. You're welcome. Anything else? Okay. Remember, we also have Sarah, Christine. I don't know if you guys are paid students or not, but we have the Wednesday office hours for paid students. That's every other Wednesday. Isaac is a winner of the drawing, so he's allowed to participate in that as well. And Ron is a paid student, but I sometimes offer scholarships. So if you want to participate in that, it's very much like this. We open it up and we try and cap it so we don't get too many people. I don't think this was too many, but if we open it up, we got like 50 people, it's a mess. So we cap it, and then once it reaches the cap, as I mentioned, it disappears. Boom, boom, boom. Was it all four? I'm not sure if I understand that. Wait, so was it all 1 through 4? I'm not sure. Christina, are you still here? Where's Christina? We have a lot of Christines and Christinas, so
Confusing.
yeah. No, I don't think you're a different Christina. Well, you're Christine. You're not Christina, I think, right? There we go. I like it. You just can't beat the person who never gives up. I like that. I like that. You see her back there. She's got a little aphorism there. She left. Okay. Well, all right. I'll talk to her later. So if she missed, I'm not sure what she meant. Do you guys know what she meant by 1 through 4? I'm not sure what that meant. All right,
I
everybody.
don't.
Yeah. Inch by inch. Your exam's a cinch, yard by yard. Your exam's hard. Isaac, I think I got you on the calendar for a couple of hours, right?
You have me, yeah, but that's
that
not
coming up?
till
Yeah,
towards the end of November.
I got to make good on
mid-November.
that, right? I got to make good with my friend Marcel. I'm so glad he didn't win again tonight. I would owe him like 4 hours. So,
What exam is Marcel even taking? I'm just curious.
he is a top producer, so his motivation. Well, I guess he could make more money, but my impression is at some point he's got to take a 65, and I think he keeps starting up, and then life intervenes, and then he takes a break. And he tells me, I'm firing back up. I go, okay, fine. So some of us are not in the position to be starting and stopping. But that's my impression, Isaac, is that he's gets to do that. He keeps claiming he's coming out to Vegas, but again, same thing. Life intervenes, and
But he has come out there at least once, right?
at least once he came out and bought Mom and I a beautiful steak dinner. So that's why I feel like I'm still liable, right? I got to make good reciprocity. It's my turn when he comes next time. So,
Well, if I'm ever in Vegas, Dean, ahead of time, I am looking you up.
I'm not going to be there much longer. I'm in my off-grid location. I've almost got this to the point where aspirationally, I want to be out of Vegas by December 31st.
Oh, okay.
But
If I'm ever in Arizona, I'll come.
Yeah, and I think I'm really off grid though, so I get a little gun shy. Like this morning, I checked my lithium battery and my solar panels, and then I go, okay, I'm only at 62%. What happens? And I just bought a generator, but I'm getting there. So winter's coming. I did a little winter last winter coming back and forth from Vegas. So I'm going to try and spend as much of the winter here as I can, just to make sure that's something I can deal with. I went to Arizona State and Tempe, and I've been in Vegas for a long time, so I'm not really used to the snow and stuff like that. So I told you I got to get a pickup truck and chains and 4-wheel drives. So my favorite tequila is
the hard way.
My favorite tequila is Herradura Selection Suprema, which Ron is. But that's the other thing. I've been moving all my liquor from Vegas to here as well. So, the other thing about living off grid is if you don't have it, it's just like in Vegas, if you're missing something, 5 minutes, you could be wherever you need to go to get tequila or whatever. And I love my sister-in-law, Isaac, but one of my favorite beers is called Lagunitas, and it's they make all good beer. It's called Maximus. And so literally there's nowhere in northern Arizona you're going to get this. And my sister-in-law, I don't mind giving her beers and stuff, but she, doesn't realize it's not, they can't have a beer. It's just a replacement issue. And she doesn't even know if it's a good beer or not. So, and we can get Coronas at the Family Dollar store. So keep her in Coronas so she doesn't go to my good beer, right? or run my good tequila the other day. The compound here is we have 40 acres, and Chris is over there and I'm over here, and she asked for some tequila, and I'm, oh my goodness, she doesn't know the difference between Jose Cuervo Gold and Selection Suprema, and she poured a very, very expensive tequila. Not that it's a money thing; it's again a replacement thing. And I said, you're drinking that from a wine glass. Taisha, has it been that kind of a day? Let me pour you a shot.
Have you had any bourbons or scotch?
I'm a big bourbon guy, so yeah. Pappy Van Winkle. I
Okay.
I drink the high end stuff. So
Yeah.
Makers is
it-
my normal everyday bourbon, but
Okay.
there's a Knob Creek behind me, and I got a Makers behind me. So, and then my Scotch is Lagavulin, which is a single malt peaty Scotch from Isla. So those are my three: tequila, bourbon, and I don't know. I don't know what that says about me, but I have a friend. I had to check him in, and I said, Johnny, I said, in our tribe, if somebody tells you have a drinking problem, you really have a drinking problem, because we're not people that are predisposed to kind of say that. And I checked him in. And he's like, I feel bad. All this infrastructure for me. I go, well, no, we paid for it through our taxes. This is a place is financed with a special tax on alcohol. And then Isaac, I was teaching in Salt Lake City. And I said, this person said, Dean, you won't find any bad cats on this campus. I said, what are the bad cats? They go, caffeine, alcohol, and tobacco. You will find no caffeine, you will find no alcohol, and you will find no tobacco on this campus. I go, man, that is such a deal breaker for me. I start every morning a little caffeine. Not every day, but
Same here.
every other day I have a stogie, a nice Cuban or Nicaraguan cigar. I might have a tequila. So that's definitely not gonna work. My dad is a missionary, and it's funny. He's kind of lightened up a little bit. But when we would travel together, every once in a while I'd order like a glass of wine or something or some alcohol. And my dad is so funny. I said, Dad, Jesus' first miracle was turning water into wine. And my dad is so hilarious. He goes, well, that was non-alcoholic wine. I go, really? Where is that in there? I don't recall that either. We ran out of wine. He said, hey, not a problem. Party on. All right. Anything else for tonight?
I do have to share because I think it's hilarious.
Yeah.
Ron comment. Maybe we need a bourbon sampling study event.
Well, I used to do a lot of that kind of stuff. I had in a former life, I owned nightclubs and things like that. So,
Yeah.
I used to sit on the floor at the Warrior games, and it was funny because they came in and go, Dean, we have a new rule. You can't bring the bourbons out on the floor anymore in the fourth quarter, because I had some accidents. I had to clean up the court. It's kind of embarrassing, right? And I said, is it for the whole everybody or just me? They go, no, it's everybody. I go, oh, right, got a rule named after me. I said, I want to be clear though. I can bring the bourbons in the third quarter. I could stock up, right, have them along the floor, right? So I don't party as hard as I used to now, because now I'm kind of semi-retired. But I used to play pretty hard back in the day. Anything else?
I enjoy these chats.
Yeah.
Get you off the study.
Yeah, get me off the subject. Yeah, I can tell you some stories for sure.
Yeah. All
All
right.
right. All right, everybody. I will see you next time. Bye-bye.